Today's breakdown focuses on Cross Timbers Royalty Trust. Ticker symbol is CRT. It's currently trading for about $18 per share. Pays a dividend once per month. Current dividend yield is about 10.6%. And the last one I received was for 14 cents per share, but I haven't updated my list of all dividends received, so it could be different. So I was going to make this video about how well Cross Timbers Royalty was doing, but as you can see, it has recently fallen off a cliff. I can't really see why this is happening. My guess is because the properties that they own are oil and natural gas producing, and there is a bit of geopolitics going on at the moment regarding those and energy in general. So maybe with that combined with interest rates going up and inflation, they're struggling a little bit. And this drop does look quite severe on this graph, but when you look at it on a larger graph, it's not completely out of the ordinary for this company. It is quite a vertical line, but I've had them before. But this here is 2008, so that's a kind of worst case scenario thing. Like this here is lockdown, so it's not even that significant of a drop. So I started my position on the 21st of June of 2021, and I'm currently 64% up, and I was about 155% up, so it's fallen off a cliff a bit for me. But I can't really see why, to be honest. Like, it has no CEO and no employees listed, which is not great. But to be honest, I can't really see it. I can't find any news. The fundamentals look pretty good. Their debt is good. Profits look pretty good, so I don't really know, to be honest. Anyway, Cross Timbers Royalty Trust is an express trust, and I'm not going to read through all of this because it is a lot of financial jargon, and if anything, it just confuses me. So, the general gist of this company is that they own properties that produce oil and gas in Texas, Oklahoma, and New Mexico. They're in the financial sector and in miscellaneous financial services industry. So, by the looks of it, they own these properties and they sell essentially pieces of these properties out as shares to people. The current market cap of Cross Timbers Royalty Trust is about $122 million. They have a price to earnings ratio of 18.28, current revenue of $7.44 million, an earnings per share of $1.11, and a pretty risky dividend yield of 10.6%. And in the dividend history, you can see that it varies quite a lot. So they seem to pay massive amounts when they make massive earnings and small amounts when they make small earnings. Now you can see here in the financial summary for the 9 months ending in the 30th of September 2022, revenues increased 70%, crude oil production, a total increase of 68%, income increased from 0k to 6k, net income benefited from an administration expense decrease of 5%, and the dividend per share increased from 73 cents to $1.43. So they doubled the dividend. Over the last year, they have a profit margin of about 90%, and over the last quarter, it's closer to 100%. Over the last year, their debt to assets ratio is about 36%, which is very good. And over the last quarter is 42%, which is a little worse, but still very good. And the annual cash flow from CRT's operating is $2.42 million, and from financing is negative $6.67 million. Now the website is very basic. They don't really have a huge amount to explain, but it's the same financial jargon that is in the Trading 212 description. General gist is that they have working interests in 7 large, predominantly oil-producing properties in Texas and Oklahoma, and most of the income, the net profits, are from long-lived gas properties in the San Juan Basin of northwestern New Mexico. And you can see here that the income from these interests generally only varies because of changes in sales volumes or prices, and there is quite a bit going on with oil prices and energy prices at the moment, so maybe they're just suffering because they've been doing well for so long. The music has stopped. Now the dividend history is pretty erratic. It varies an awful lot, but the further down you scroll and the further back in time we go, the smaller the numbers get, so that's always a good sign. They are raising the dividend as time goes on. But it's not a huge amount. Like, there's a lot of information, but you can't really find a good gauge of predicting how much they're going to pay because it varies quite a lot. But they do pay every month, which is a lot of the appeal, I think, with the stock. Now, the long-term graph, this section here is the very steep drop that we're currently having. and you can find quite a few of them around. Now it's probably going to fall quite a bit more before it rises again, and if that does happen, I'm going to buy more because I'm only going to have a small position relative to the overall portfolio. But if I can get it to €100 quickly, then all the better. So they were founded in 1991, and this graph goes back to 1992. So it's a pretty good gauge of the entire life of the company so far, since they've decided to be publicly traded and entered the stock market game. But they've had a pretty wild ride as time went on. This is 2008 crash, devastating. And down here we have lockdown. Should be able to find the dot-com bubble as well. That was about 2001. That's about here. And it did quite well during that. Fell off a bit, recovered again. CRT has a 52-week high of $30 and a 52-week low of $12. So at some stage over the last year from today, they've reached $30 and they've fallen down to 12. So it's kind of in the mid-range at the moment. I would imagine it's going to go a lot closer to the 52-week low in the next couple of weeks. So overall, I think it looks pretty good. Like, I'm not advising anybody to invest into it because this could be the beginning of the end and I have no idea. And the money that I have in it could disappear tomorrow. You don't really know. It seems to have happened a few times before and they've bounced back since. So I think when everything calms down a little bit with the energy sector, it might become a bit more predictable and it will stop turning the hairs on my head grey. But it is an important lesson that I was going to make this video because it was 160% up, and now it's still 65, so 63% up. But this can happen in the space of a couple of days or even a day. So if you're not prepared to see this happen, then you might not be prepared to be in the stock market at all. But anyway, that's all for this one, and I hope that you found this useful.